Hey folks, Dan Frio here, the rate update. Today we're going to talk about mortgage rates. We're going to wait for people to get in because I know I just started and I think I'm a couple seconds early. But today's video, we're going to kind of just put the curtain aside to explain to you guys how mortgage rates are determined. And I watched a video today by Kyle. He's a realtor he's in Ohio. He does a phenomenal job. This kid has grown his channel from like zero to 150,000 listeners and clients and viewers on a daily basis. So that's phenomenal. So what we want to discuss today is, how are mortgage rates determined? Is there one rate? Does the Federal Reserve control mortgage rates? What happens? So while we're waiting for people to join us, I got some new features on our website that I want to show you guys about. So I got multiple monitors to going today. So guys, so if I look down a lot, I apologize about that because it's just me in the background. Also, I'll put a caption out there. If you guys would, if you're posting a question, please keep it filtered. No obscenities or anything like that. I hate to boot you out. Last week, I have some kid always that comes in and just does stupid stuff, and I booted him out. So let's get on to it. Here's the website, and we're going to get to mortgage rates in a second. But while we're waiting for people to come in, let's go over some things that we're going to go through. So here's the website that I have. And again, what we're doing is waiting for more and more people to join us. So there's a lot of new features that we added to the website, just so you guys know. One of the features that we're asking for right now is realtors. We're going to start having a realtor roundtable on Thursdays. It's going to be Thirsty Thursdays for realtors only. And basically, I'm here at your beck and call to answer all the questions that you guys have. Okay, so if you're a realtor out there and you're like, hey, Dan, I have some questions, or I'd like to learn more about the mortgage industry, because you should. Go to my website, and right here in inquiry forms, click the inquiry, the realtor form, and click it. It's going to open up. If you have a Google account, well, you have to have a Google account to get access to this. So go through and fill it out. I will personally call you because you're going to reflect me. What are we looking for in this? We're looking for realtors out there to help our clients. Okay, so we have a lot of clients that call in on a daily basis that get pre-approved, and they're just like, hey, I'm moving to Atlanta. I need help. I don't have a realtor. I don't have an attorney. This is where we need your help. We're asking realtors to sign up so we can get you into our referral program. Plus, again, we're going to have a Thirsty Thursdays. Bring any beverage you want. I bring my tasty water, but that's that. So other parts of the website that you should find entertaining or useful, there's a lot of stuff right along the top here. But if you scroll down, this is for clients. If you're out there and you have a house, this is the number one website that people I've used, and it's phenomenal. It'll tell me the value of my house, all about my house, if I have liens, and a whole bunch of other things. So you just plug in your address in here, it'll check the value. But if you want to unlock a bunch of additional features, like, hey, what refinance options do you have? How much can you rent out your house for? Do you have any liens on your home, and so forth? Plug in your email address. I pay the cost of it just to support you guys in my YouTube channel. Also, you guys, if you're watching me now, you know that I review the rates updates every day. We added those rates to the website right down here below, therateupdate.com. If you want my newsletter or to sign up, you go right down here and you can start that. So let's get on to it. Why you're here today, basically, is how are mortgage rates factored? So I'm going to tell you and show you some behind the scenes stuff that nobody usually gets privy to see this stuff unless you're in the business. So again, we're going to start having a Thirsty Thursday with realtors out there. So if you're a realtor, please sign up so you can get involved with our Thirsty Thursdays on Thursdays. Okay, that was a lot of Thursdays in that one. So let's go through it, and let's first talk when people say, hey, the Federal Reserve is raising rates. What does that mean? Okay, kind of nothing. I'll retrospect that. Nothing in regards to mortgages. They don't directly control mortgages. What they do control is the federal funds rate. Okay, so there's a big variance between mortgage rates and the federal fund rate. Federal fund rate, what the Fed controls, actually is interbank lending. A bank has to have so much reserves every night before they close. And if they're short, they go to another bank and get money lent to them overnight so they meet those reserve features. So now, how do mortgage rates get calculated? Well, the first thing I want to show you is I'm going to put my trusty glasses on, and I stepped on my other ones or sat on my other ones yesterday, so bear with me there. Let's go here. We're going to go to the first thing is MBSs. You guys wonder, why do I go over MBSs every day? Well, the main reason is it's the biggest component of your mortgage rate. Okay, so there's a yield in the MBS market, and that's right up through here. If you see here, and I know it's little, if you're on a different screen, you can zoom in, but we follow the MBS market. This is called the mortgage-backed securities market. You're going to see this is an MBS 3.5. Okay, let me explain that to you a little bit. I'm going to put myself in the bottom section. The 3.5 is the coupon, meaning the rate. There's a rate variance. So to make it as simple as I can, I'm going to say this. This coupon will take rates from 3 to 4% because there's a 0.5% variance in there. So we monitor the Fannie Mae or the MBS market at the 3.5. That gives us a 3.5% coupon. So just think of that. Mortgage rates automatically are starting at 3.5%. Okay, so just keep it at that. As risk factors go up and down, the rates are going to go up and down. So other features that are involved with your mortgage rate is, and let's go down through here, your credit score. And I'm going to show you how all this works. Your credit score, where the house is located, the house price and loan amount. That's going to factor in our loan to value, the down payment, the loan term, interest rate type, loan type. Okay, one thing I want to explain to people, I did a video the other day and it was really exciting because one of my loan officers came in and said, hey, we had a customer call in and they're buying a $1 million home. I'm getting to something and bear with me. And so we're like, what we do for our clients is we analyze your loan for, first of all, what program makes most sense for you. So we determine the program. In this case, we compared this client's $1 million purchase with a jumbo loan, a conventional high balance loan, and an FHA loan. Yes, FHA loan. Okay. Guess which one was the beat? Guess which one was the best one for the client? And they never even would have even tried to get an FHA loan. FHA. Okay. The payment is $1,200 less a month. Yes, you have to pay a fee at the front end to FHA. You're going to recoup that fee in 6-7 payments. So from there on going forward, you're going to save $1,200 a month. That client actually, when we first said that to him, he's like, I don't want an FHA loan. Those are terrible loans. Those are for people with bad credit. It saved him $1,200. So the first thing you need to do is make sure you're into the right program. You need an advisor to do that because you can scan rates everywhere, but are you in the right mortgage program? So that's where we're going to start this. So let me answer the first question real quick, and then we're going to move on. Do you anticipate reaching 5% by the end of the year? Yes, I do. Let's recap that real quick. If it wasn't for the Russian war right now, you would see rates even much more higher. That was bad English. Much higher. Why? Because the fear of the war is pushing people out of the stock market into the bond market, and they're buying mortgage-backed securities. So once the war is over, when we hope it's quick and easy, and I won't say easy, it's reduced. I'll put it that way. However, if this thing really gets escalated, all bets off. Okay, so let's start dissecting this. I bet you didn't know all these components of a mortgage rate. All right, so the first thing we're going to get to is, and I'm going to show you these things as we move forward. I went through the mortgage types and everything. Let's go over and see. Let's see a rate sheet. This is from AnnieMac, and you can go through. And I just want to show you how difficult this is. Here's the first page of the site or the rate sheet, and this goes through and tells us different high balance pricings and so forth. I'm not going to go through it in detail. I just want you to see this is just one rate sheet that we get in the morning. Okay. Look at all the factors that get involved. Okay. So the tough part of this is, thank goodness, everything's automated nowadays, but I bet you didn't know there was this many rates when it came out, when you asked for a mortgage rate. Right. So we're going to dissect this. So what we have is the next piece of the puzzle that we're going to go through is what we call loan level price adjustments. And this is loan level price adjustments directly from Fannie Mae. So let me see if I can zoom this in for you guys to understand a little bit more. Let me get rid of this section here. Okay. So this is Fannie Mae's LLPA. What a loan level price adjustment is this. Basically, all the information that we just went over before, we said, what's your credit score? What's your credit type? What type of loan are you in? Or what type of loan product do you need? What is your house value? So if you've ever asked me, hey, Dan, what's the rate today? I asked you these questions. Okay, what's the value of the house? How much of a loan are you looking for? That gives me the loan amount and the house's value. Next thing is, are you looking to pull out cash? Are you buying a house? Are you just rate and term, which means we're just taking your current rate or current balance and changing the rate and or the term. Hold on, I got something I'm clicking out of over here because I need to get to that screen here in a second. So all these things are factored in. Okay, so what I want to show you is just the LLPA sheet that we get from Fannie Mae and Freddie Mac. They both have it. So let's go down through here, and I'll explain these as we go. And they're basically self-explanatory, but I can assure you didn't know these things. So the first thing we're going to look at is what is your credit score, okay? That has a variance on your rate. So we go through here. Now, this isn't adjustments to the rate. It is adjustments to the yield that we receive from the lenders. And I'll tie all this together as we go. Okay, but when you're looking at this, you can see on a 620 credit score or less, there are hits. And you can see this goes from 0.5 to 1.5 to 3 to 3.25 and so forth. All right, and it works its way over. You can see, though, as the scores go higher, those bumps, those hits, those add-ons, loan level price adjustments, it's adjusting the price, goes down. So that's just one factor, okay? And again, I'll tie all this up at the end so you get it. Then we go down through and we're seeing, now, again, that's just the credit score. This is your credit score and what we call your loan to value. Some people, I had a debate with somebody this week that they said, you know, I'm at a 740, so I should be or 739, I should be in the top bucket. Well, here's the buckets. This is pretty easily explained. 720 to 739 and 740 equal to and or greater. Okay, so these are the buckets. If I ever explained anything to you, I said, what's your credit score? Because there's multiple buckets. There's a 720 to 739. There's a 700 to 719 and so forth. Okay, so let me add me in here so you can at least see me at the bottom. So then what we do is we go down through in here and you could see there's different types of property. Is it an adjustable rate mortgage? That's a different mortgage type and there's no adjustments there. But is it a manufactured home? There's actually a hit for that, meaning there's a 0.5 bump in the yield. And again, I'll explain this at the end. But if you're down to an investment property, you can see it goes all the way to a 4.125 hit to the rate if you're looking at a 97% loan to value or higher or greater. I don't know of any investment properties that you can go that high, but it's in here. So let's say, for example, you're buying an investment property, you're refinancing, and you're at 80%. So you're going to be in this bucket here. You're going to have a 3.37 add-on because that property is an investment property. Okay? The list goes on. Now we go down through here. Let's see where we did that part. Here's where I explained the cash out. Are you looking for a rate and term, which means we just basically pay off your current mortgage balance? That's it. Or you're purchasing the property. Or are you looking for what we call cash out? If you're looking for cash out, the rate goes up because here's the adjustments, the loan level price adjustments. Okay, 620 and less, you have a big bump. Okay, 3.125. That same person with a 740 credit score, you have a 0.85 bump. So that might be why, you know, hey, my neighbor got this rate, and my rate's this. Or my rate's much better than my neighbor, I had him call you. We couldn't help them because they might have been down in this area and you were up in this area. Okay, so that's another component of that. Again, you can see down here, purchase or limited cash out or cash out refinance. That means basically you're getting $2,000 or less. And then cash out means if you're getting $2,000 or more. So you can see those bumps. Just for getting cash out, it's 1% bump. And the purchase and rate and term is 0.25 bump. Okay, list goes on. Now, what kind of property is it? A multi-unit property? Oh boy, it has bumps also. 1% bump for a 2-unit, 1% bump for a 3-unit. Now, Freddie Mac has different bumps, but there's all the bumps according to that, right? Let's go down. Does your mortgage have a subordinate financing? Meaning, do you have a home equity loan that's continuing to stay out there? Maybe. If you do, depending on your the loan to value, which is right here, ranging from here to here, you might have another bump. Okay, we go down through. Pmi factors. These are here. I just want to show you this. You're not going to get done with this and completely understand every aspect of everything. I just want you to understand there's not just one rate out there. Home Ready program. That's a different program for those looking to buy a property with limited money down and or refinancing to a substantial amount, meaning like 97% loan to value. High LTV refinance options. These are people in the high cost limits. That there's bumps to that as well. So I'm probably boring you to death on that part of things. Okay, so the next thing is let's get to a rate sheet. Now again, let me see if I can zoom this in. Okay, so this is going to make it much simpler for you to understand. So let me try to zoom in as much as I can so you can see. All right, so for example, in this cell right here, we have a DU, conventional DU refi now program. That's right here. That's what it explains. And it explains every program right here. DU refinance program here. This is the 30-year fixed. So let me explain how this works. This is the nitty gritty, guys. This is where you need to pay attention. All right. Remember we had all those adjustments on the other side. It was, 2.5 and a 1.5 and a 3.25 and so forth. Let's go down. Well, let's go find this and let's find a 30-year refi now, not the refi now program. Let's just get to a standard program. Well, let's keep it this for now. All right. So this is the 10-year. We'll go to the 30-year. The 30-year. So we go over here. Here's how rates work. Okay. And again, I'm pulling the curtain back. I'll probably have a lot of people in the mortgage industry ticked off at me, but I want you guys to understand this. So let's go down through here. These numbers right here. Well, the first column is what your rate is. All right. The next columns are basically the yield. How much it would cost you to get a specific rate, or how much in credits can you get back to get a specific rate. So let me explain this. 100, basically right through here, this is what we consider par. So it really wouldn't cost you much to get a 3.625 rate. Okay. So 3.625 right here on a 15-day lock, you would have to pay 0.046 in points to get that rate. So anything above 100, you get back in a credit. Anything below 100, you would pay points to bring it up to 100. 100 is our baseline. Okay. So for example, we go to 3.5. This will probably make more sense to you. Let's just round this number to 99.5 right here. Okay. That means to get a 3.5 rate, you would have to pay, what do we need to bring this to 100? You'd have to pay well, again, we'll round it to 99.5. You'd have to pay 0.5 in points to bring this to 100. So meaning to get a rate at 3.5, you'd have to pay a half a point. Okay. Now, here's where these other factors come into play. Remember all this stuff, the minuses and the numbers and so forth. So let's go up to here, right down through here. So let's just say, for example, we're in right here. We're at 620 and a 70 or 75 loan to value. It's a 3% factor. Okay. What we do is we go back to here and you have to minus 3 off of this. Okay. So this now would become 97. So to get 3.625, you'd have to pay 3 points. Okay. Because whatever this factor made or created, or how, I think you get my point. So we have to always bring the number back to 0 or 100. Okay. So when you go up here, though, you're going to say, well, this is above 100. So at 3.75, I'm actually going to get 0.5 back. Yes, maybe, because we have to go back to here and see what adjustments had to be made. Okay, so let me make this sense, make sense for you so you can see how this really adds up. Let's go through here and say, okay, I have an investment property right here, and I'm going to go to 75 loan to value right here. So I have a 2.125 factor. All right. But is that it? Well, no. What did we say? We have a 70% loan to value. So now we go down here. What's your credit score? Well, my credit score is 680. So at a 680, I have a 1.125. So now we have to add the 2 1/8 plus the 1.125. Well, is there any more? Well, are you cashing out? Well, you have to add another 1. So now we're at 1.125, 1.125, or 2.125. Now we're at 3.25. So now you got to go back to this and say, so now to get this at par, again, to bring it to 100, your rate's down here. So when we started, you can get 3.5, but now by the time we made all these adjustments, you're at 4.5. Okay, that's how all this works. All right, so we don't do this manually because you could see it could drive you crazy. And if we miss one component, it could be devastating. So a lot of times people come back to me and they're like, hey, Dan, this company's quoting me this. I'm like, dude, it can't be. It can't be. You're telling me it's like buying gas right now at 55 cents a gallon. It can't exist. They probably messed up here. And I have a lot of clients that ultimately found out that their loan never went through because of some reasons. And I can guarantee you that reason was they messed up the pricing and they didn't want to honor that. So they drug their feet and made it to the point where they couldn't even get it for you. So the loan was null and void. It was withdrawn, or they come back to you and said, oh, we didn't close in time. So now we have to raise your rate 1.4% because rates went up. If you really dug into that, I can almost assure you they screwed up and they're passing it on to you. So how do we do this? So the other day I posted a video. How can we get you like 130 different quotes? So there was a young man, Kyle, he's a realtor in Ohio. He just created this system. We have it for you. He created a system and there's a cost to the borrowers for this. But here's what we do for you, just so you know, because we can't do this manually. Because there's so many components and there's lenders all over the country. So what happens is, let's say this, here's how rates get created. We watch the MBS rate. Okay, that is our benchmark. So let's say in that case, rate's 3.5, right? Because of the MBS coupon. So now we monitor and see how that's doing each day. And there's many times where the rate is the same each day, but you're like, okay, the MBS market went down. Shouldn't that have pushed up rates? Well, it went down enough that the only thing that really happened was in here, this section here, the lenders, remember, this is how much we started at 3.5. Well, it might have it might have not moved enough. The MBS market might have not moved enough to change the rate, but this number might go down to, if rates went up, this number might go to 99.2. So you'd have to pay more to get this rate. Okay, so that's how that works. So now let's get back to my rate sheet. So what do we do? So here's what we do, and we offer this for free. And this is one of the components we have, and I advertise is send us your loan estimate, because we can scan. We're now the largest brokerage in the country. We can scan lenders throughout the whole country, and there's over 130 in this system, and find out who's got the best rate for you, and who's got the least amount of fees, and who's got this special program going on. So let me show you behind the scenes what we do as mortgage professionals that people don't want you to know. And a lot of companies don't have this, because if you're at a bank, you offer one rate sheet. If you're at a credit union, you offer one rate sheet. If you go to a mortgage company, you might have one rate sheet. If you go to some brokers, they might have 5 or 6 or 10 lenders set up. We have over 130. So let me show you how this works. So this is the system we use. It's called Loan Sifter. All right. What we do is we go in here and say, okay, this client wants a conventional loan. It's a standard loan. Let me zoom this up. I don't know if I can zoom it, but just if you would I can't zoom it. So bear with me. It's a purchase. It's going to say they're buying this house for $600,000. I'm plugging in the numbers and I'll show you how it all works. They want to put down 20%. So I'm going to put in this cell 20%. I click over here and I say their credit score is a 780. I'm going to say their zip code. It's going to be a primary residency. That's what this is asking for up in this area. what kind of property it is. Is it a single family, a condo, a PUD, a 4-unit, a 5-unit, a 10-unit? What is it? Down through here, is it manufactured? No. What's the zip code? I'll put in 60623. It's in Chicago. Go through here, price line. And then let's just click this and see what happens. I'm going to have to distort this in 1 second because I don't want you seeing all the lenders. I don't know if I'll get in trouble for that. So let me click the button and just try to get this out of the way. It is searching the entire country right now to figure out where the mortgage rate is. So let me see what I can do with this piece. I'm trying to filter it so you guys don't see every lender out there because I don't know if I can do this legally. But okay, so it tells you right here, this is a Fannie Mae loan. You go up to the top, it gives you the loan amount, the down payment, and so forth. And now you go through here and you can see, look up real close, the starting rate is 3.875. And at that, you're at 0.027. So basically, it wouldn't cost you anything to really get that loan there or there. As we scroll down, you can see these are all the lenders that we found that will do this loan based on the criteria we gave it. All right, look at them all. I have the option to take your loan or any clients that work with us to any of these lenders. Okay. What we do is we also go through here and we click in a button saying we do not want the lender to charge any fees. So who is willing to do this loan and waive all their fees? Okay. And that's what we do. So we go through here and then normally we always take the top one? No. So here's now an area that a lot of people don't understand or don't know. There are also things that are called overlays. Okay, so here's the perfect overlay for you to understand. FHA. FHA they truly don't have a minimum credit score. If they do, it's 500. But I challenge you to call every lender in the country to tell them you have a 520 credit score and see how many people hang up on you. You might find a handful of lenders that'll do it for you. Okay. But again, I just said FHA has a 500 minimum score. So why wouldn't that lender do a 520? That's an overlay. They don't have to. They don't have to give you that loan. They're not legally liable to give you that loan. So you might, for example, have a 560 credit score and everybody turned you down. We just closed a loan the other day with a 549 credit score. How? That's where I scan this whole system and then find the lender. Just because that company came up with the best rates in town, they won't do that loan. Because they have an overlay that'll stop us from doing that loan. So that's where all this comes into play. So your mortgage rate isn't calculated by the Fed. Every bank basically uses the MBS coupons as their base rate. And then they figure out how much profit margins do they need. They add that into it. And then they add in the LLPAs. Once all that's factored in, that's your final rate. So there's not just one rate. There's actually every lender probably has a different rate because they have a different profit margin. Okay. So again, look at let's look at the variance here. You have this company that would do 3.875 and it would actually, if you can see this close, it would give you $32 back in a credit. But if you go down here, it's the exact same loan and the exact same criteria. This lender down here, everything's the same. It would cost you, they would charge you $2,658. And it even goes further down through here. This bottom one, this is the last one down here. It would cost you $5,528 to get the exact same thing as this company is willing to give you at 3.875. Okay. So hopefully that explains a lot to you on how rates work and how we as a broker are huge benefits to you because we have access to all these programs. We have the scanning system and it's free for you to use. Okay, so how do we make money? Let me draw that line behind the curtains too. We contract with all these lenders to pay us a brokerage fee to basically find the clients and do all the paperwork. So what happens is you apply with me. All right. We put your loan into the computer system. We run your credit and then we run your loan through Fannie Mae and Freddie Mac to get it approved. And that's how all the banks do it. It doesn't matter if you go to me, Citibank, Wells Fargo, Guaranteed Rate, Rocket Mortgage, anybody. We use the same system. Now we have an approval. Now, what I do as your mortgage advisor, we scan the whole country to see where we can get you the best rate. But then we find that best rate. Then we, as your advisor, figure out, because of experience, will that lender do the loan? Because do they have an overlay that might stop us from putting the loan there? They might just be terrible to work with. Some lenders are fantastic. Some, they just sit there and it's frustrating. I'm the middleman. I basically am your consultant. You come to me for the mortgage. We find you the mortgage, and then we're basically working with that lender and you to get it all the way to closing. Some lenders are just terrible. Their service is bad. There's, everything, a lot of pieces of the puzzle are bad. So we don't want to put you through that because I don't even know what their customer service is like to you. I might be giving them $1, $2, $3 million in volume a month. So I'm hopefully getting their ear, but you just calling in, you really aren't going to get anywhere. Also, how this works is a lot of companies on this list you can't go to. You can only get access to these companies through a brokerage. Okay. So this is how mortgage rates work. So there's not one rate for everybody. The Fed doesn't set the rates. Now, what factors are compiled into this? Okay. So your credit score. But let's take the outside sources. Why are mortgage rates going up and down? Okay, that's a great question, and I'd love to answer that. But if you would, start asking your questions so we can move on to that, because I want to really dig in so you guys understand how mortgage rates work, what can you get, how do you figure this out, and where do we proceed? But so we post every morning. I post a YouTube video and telling you, okay, here's where rates started. Here's the economic calendar. And based on all of that, here's what's going on in the MBS market. Well, it's like a stock. You could have, the MBS market goes like this all day, every day. Okay. You don't see it as the consumer unless there's a big enough move that rates move. All right. But I see every tick by tick by tick. Okay. So that's how rates work. Guys, please start asking some questions. That's why I do this on Saturdays. And I'm sure you didn't come here to sit just to watch me chatter for an hour on here. But so please ask some questions. Honey Buns just posted. Thank you. Appreciate it. Start posting. So where were we? The rates, MBSs. Okay. So how does all mortgage rates kind of factor in? So the biggest thing here right now is the Federal Reserve, the Fed, and the Russian war. Why? Okay. Well, the Fed is trying to keep control on inflation. All right. What they're going to do is they're going to have to start raising the federal funds rate. The federal funds rate, you're going to say, Dan, you said that has no factor in any of this. It doesn't have a direct correlation with mortgages, but it has a trickle effect through the economy. Okay. So when they raise the federal funds rate, all of a sudden the banks are like, okay, I'm going to start raising my rates. So they start raising the prime rate and your credit card rates and your car loan rates and all the other rates accordingly. That's what's that's just how it works. So that's why we really watch that. And then the markets determine it as well. So what happens is with the war, I won't even say it because it sounds bad. I don't know how to. If it wasn't for the war, the rates would be extremely higher right now because inflation is really high. And I have said I think it's transitory. I still think it's pretty much transitory, but the supply chain issues, I figured were going to get worked out by now. The more and more people I talk to in manufacturing, it's worse than I thought. So it's going to take the supply chain a little more time to get fixed. So that is going to increase prices and everything else. The job market still has me baffled. I have people saying, I'm not going back to that crappy job. Guys, I don't know about you, but my mortgage payment doesn't stop. They don't care where I work, if I'm working or anything else. They want paid. Okay, so eventually people are going to have to go back to work. We had the jobs report out this week. It was pretty good. The unemployment report was pretty good. The JOLT index, which shows the number of job openings in the economy, is 11 million. So there's 11 million job openings. So it's hard to figure out, if people can't get a job. Okay, so that's that. All right, guys, start asking questions. I'm going to start shooting through them, because that's basically the basics I want to talk about with the mortgage rates. But again, you need to know the correct programs that you're getting into. Again, the analogy I just made before, it's actually true. We're doing the loan as we speak. $1 million purchase through FHA. Okay. Another big thing that a lot of people don't know, if you're a veteran, God bless you. If your son or kids or were in the military or are in the military, you have family, friends, neighbors, anybody in the military, have them check into a VA loan if they need a mortgage. It's there. You can get 100% financing, even cash out. You can cash out, pay off as many bills as you want, consolidate everything into one at 100% financing on your home. All right. So the questions are starting. So let's get to it. We got Honey Buns. What are you? Let's see. What are your thoughts on an FHA 5/1 ARM? I don't like it. I wouldn't be a big proponent. Let me put it this way. I always tell you, and if you've ever talked to me, I would say, hey, this is what I would do. I wouldn't take a 5/1 ARM. If I did anything, I would do a 7 or 10. Why? Well, the average loan, but there's a caveat there, but the average loan is 7 to 9 years, last 7 to 9 years. Okay. Unless I know I'm going to do something within those 5 years, I would go with a 7 or 10 because the rate's probably not much of a difference. And I would rather pay that extra to know that I have that longer duration of time at that lower rate, because in 5 years, what's the rate going to be? The nice thing is there's a lot of built-in triggers to the adjustable rate mortgages now. They're not the adjustable rate mortgages of old. So I watch a lot of YouTube and I watch a lot of news and things like that, I watch them and they're like, oh yeah, back in 2008, these adjustable rates killed the whole world. Those adjustable rates did. Today's adjustable rates are completely different. It's just like cars. The cars back in the 60s, we always thought were good. They're not as safe as cars today. So over time, they've tweaked these systems. So that would be my answer behind that. So I would see, is there a reason why you want the 5 and not a 7 or 10? Is there a huge variance between the two? Or do you specifically know, hey, in 3 years, I'm going to finish here and I'm moving over to here. It's already set in stone. In that case, take the 5-year ARM. But if you're looking for longevity, I would go a little bit higher on that length of term for the lock, just so you don't get stuck. But great question. Thank you so much. Next question is, hi, I have a plan to buy a $550,000 home in Northern Virginia. Northern Virginia. Hey, I'm from West Virginia, the northern part of West Virginia. My sister lives in down in that area, in your area. Couldn't find a home as much worth my money. What's your thoughts to buy around June, July? Institutional bankers are saying recession. Here's my thought on buying now. And I'm not a realtor. And let me caption it by this. Houses come for sale. And this is going to sound bad. I don't care if you buy it or somebody's going to buy that property. We do a lot of investor loans, a lot. And they're still buying and buying and buying. And I just did a video, I think it posted yesterday or might be posting today. Why are investors still buying rentals? Because there's a lot of money to be made in the rental market, especially that. But let me ask you this question. It's really hard to find a house right now. But the forbearances, I was a little bit wrong there, and I'm going to take that. I'll take it in the shorts on this one. My thought was the forbearance market is, if you don't know what a forbearance is, if you have a mortgage and you had it 2-3 years ago when the pandemic hit, you could actually call in your lender and forbear, meaning postpone your mortgage payments for up to 18 months. Well, 7 million people took advantage of that. And a lot of them didn't need it. I have a lot of clients that are like, dude, my financial advisor told me to take it because I don't have to pay my $2,500 payment for a year. I'm using that money and putting it into the market. Why do you think the market ran up so high? Why do you think Bitcoin ran up so high? Why do you think all this other thing? I've been saying this for 2 years, but now it's coming to pass. I think right about now, March, April, May, you're going to see a lot of houses come on the market. Why? The people that were in forbearance that are starting to try to make those payments and can't, they should be selling their house. They shouldn't wait for it to go into foreclosure and proceeding, because you're going to eat up all the equity you have in your house on legal fees. So put it on the market. Okay. So my thoughts are we're going to have more and more and more houses come on the market. The contractors are building like crazy. So the only thing you'd be waiting for is, I don't know if I'd put a time frame on July or August. I would continue to watch the markets. And if you see a house that you really like, jump on it. I'm not a proponent of way overpaying, but I wouldn't pull myself out of the market and say, I'm going to wait till fall, because rates are going to go up. They're going up, guys. and home prices are only going to go up. You know, the people that were fear mongering a year and a half ago about don't buy houses, don't buy, they just missed out on about a 20% run on housing. Okay. Are we going to have a crash? No. Okay. We're probably going to see houses to level, maybe come back to the 3 to 5 or 7% appreciation, latter part of this year. But I think the spring season is going to be hot, and there's going to be a lot of buying. But it's still that supply is tough. But continue to look, because a house will come on the market, and you can still jump in while rates are low. So thank you so much for the question. I really appreciate it. Let's see. Let me go to the top. I'm going to try to get through all these. Dan forgot to hit the like. Hey, thanks, man. Greatly appreciate it. Coming. Okay, maybe you're here. VA loans are the best. Thank you. It's funny how. Let me elaborate on that. We have a lot of realtors calling us, because what happens is when we do a pre-approval, usually the selling agent will call us and they'll say, "How strong is this approval, do you think?" It's an approval. It's like, I don't know how to explain that, but they're like, "Well, we're really concerned because it's a VA loan." What are you concerned about? And aren't you feeling a little guilty that you're basically turning your back on a vet? So there's nothing different really with a VA loan and an FHA loan and a conventional loan. It doesn't take any longer. The appraisals are a little more scrutinized, but if you don't have anything to worry about with the house, then you shouldn't have anything to worry about. Okay, so that's that. Go to the next one. Everything else being equal, how do you get a better deal versus a retail lender? Great. Economy of scale. Okay, I reiterate, we're the largest brokerage in the country. What happens with a lot of these banks, here's my analogy. I don't know if you have a Costco around you or a Sam's Club or whatever. How do you get products cheaper there than you do at Kroger's, or we have in Jewel in Chicago? They have Publix down in Florida and Kroger's on the East Coast and so forth. Why is Costco cheaper than Kroger's? Because they buy more in bulk. Okay, so we get better rates. If we were to go to the place that shoots that thing up to the moon, I won't say the name. If you go to them directly and then you come to us, I used to be able to work with them on the wholesale channel, and my rates were much better than they would give you. Why? I do all the work. Okay. So basically, here's what it is. We do a bunch of volume with lenders. The more volume you do, the more perks you get from them. Okay. So they'll come to us and say, "Hey, if you can give me $10 million this month in volume, we'll actually we'll cut the rate down 0.25% for all your clients." That's what we do. So in a lot of these companies, you don't have access to. So I love, if you're out there and you have a loan estimate, email it to us. It's LE Review. Send it to me. Send it to Dan@therateupdate.com. Let's review. We'll review it in an hour and come back to you. We'll scan it through that system I just showed you and come back to you and say, "Here's what's out there." So again, how do I make money? The lender pays me, because if you go to, let's say that you go to that place that shoots the people up to the moon, you call in, the person that answered the phone, they're getting a salary, they're getting benefits, they're going to get a commission on your loan, they're going to get all this other stuff. Okay. They have a lot of expenses on that loan. If you go through me, I can go back through that same company. I did all the work. I found the client. I got the application. I pulled the credit. I got them pre-qualified. I put all the paperwork together, the pay stubs, the tax returns, this, that, ordered the appraisal, got the title work, did the legal fee, and sent them a packet. They go through it, make sure it's all there, click it. Okay, you're good to go. They didn't have to incur all that cost of an internal person, so they pass that savings on to us. Plus, they give us perks for the volume that we do with them. So that's how we get better rates than you even going directly. I can put it through the bank. They even pay me a fee and get cheaper in most cases than you would get. But again, don't forget my system that we run your loan through over almost every lender in the country to figure out what's out there for you. I can't physically do that. I couldn't be able to call and check every website. We have this system that we go into, we plug in your data, and it just tells me everywhere where it is. And that's how we help you. So thanks for the question. Greatly appreciate it. Guys, I'm not filtering these, so please watch your language. I tried doing reverse for my clients and the value came in less. So next best option in VA cash out. Now the new lender would not accept FHA appraisals, both government loans, right? Yes. But I mean, you should be able to go back to your appraiser. I don't know if you're the loan officer. You should be able to go back to them and say, can you get it converted to a VA loan or VA appraisal, because I'll pay an extra fee. They are completely separate. So a conventional appraisal is probably the easiest out there. What is coming out on the 19th of March, I just posted this video, is DU, which is Fannie Mae. They're only going to require, if it's a purchase transaction with a 90% or less loan to value, they're only going to start they're requiring a desktop appraisal to make it quicker, faster, and cheaper. All right. But in your case, yes, there's a VA appraisal specific, FHA appraisal specific, and a conventional loan specific. They're all different, and they have different criteria built into the questionnaires and the answers and the data in those appraisals. So that was a fantastic question. But if you're a client, reach out to us. We might be able to help you in that. We have most of the appraisal companies throughout the country we're set up with as well. So we can go back to them and negotiate saying, hey, we have this. Can we flip it over to a VA loan for $100 or something like that to help this person out? They might help us. So anybody, if you need my assistance on anything, email me. It's Dan, D-A-N, at therateupdate.com. Let's go to the next one. We got a lot of success with IO products, specifically cash out refinance, paying off revolving credit while providing nice cash flow. Would you agree? Yeah. Would I personally do an interest only? I don't know. It is good. We've had a huge uptick in those requests as well this week. You just got to remember, what are you doing with your excess money? Okay, so if you're investing it, probably not a bad idea. Well, not the way the market's going right now. If you have other debt, probably not a bad idea. It is the nice thing about it when it's not an IO, it is a forced savings account to a point. It will give you some savings, and usually the IO feature is good for 5, 7, or 10 years. So it depends. Every scenario is different. Would I personally do it on my primary home? No. On my second home, maybe. But I plan on keeping that forever. I plan on staying at both places. But, rental properties might be a great option for that, to drive down that cost. You're getting the appreciation, you're getting the cash flow and so forth. Personally, I don't know if I would do it on my own property. That's everybody's perspective. But I love the question. But I'm just saying personally, there's no right or wrong behind it. Next question. Do you work with loans in New York? We don't. And if you know anybody out there that's a loan person, a mortgage advisor that works in New York, please email me. I don't know how many loans a week we get in New York that we cannot help. New York is difficult, to say the least. We tried for about a year to get licensed, and we finally just gave up. So nothing against you. I'd love to help. I make money by doing loans, so I don't want to turn you down. Also, just on that path, I review loans. We can't deny a loan unless I review it, because I'm the one that tries to squeeze the round peg in the square hole. If we can't do it, I can almost assure you're not getting that loan done, because we offer all the programs, conventional loans, FHA, VA, USDA, jumbos, high limit loans. We have non-QM that opens the gate for a lot of things. We have hard money. We have bridge loans. We have it all. So we should be able to help you in a lot of cases. But let's get to the next one. But thanks. If anybody out there knows somebody in New York, I'd love to learn who they are, and I'd love to refer my business to you. Planning on refinancing to conventional in 3 to 5 years after my credit improves. Why? Okay, so that's I get that all the time. Okay, so let's look at this. Where are rates going? Okay, so let's say today your credit score is 680, and yes, today's rate is 4, just say. And you're getting 4 1/4 because your rate isn't as good. Okay, you work for a year or two to get your credit scores up. Now you're the max. You're as good as it can be. But by the time 3, 5 years from now rates are 5.5. Why'd you wait? Okay, so you get my point. That's why people are like, well, I'm just going to rent for another year or two, for this and that and whatever else. why are you waiting? House prices are going to go up. Rates are going to go up unless you have to. But would I absolutely just say, hey, I'm going to try to, and it shouldn't, I didn't say that word. It sure shouldn't take you 3 to 5 years to fix your credit. Go to creditscoresandmore.com. It's a website I just created. I just updated. I created it years ago. But I really just lost track of it because it gets a lot of hits, and I fixed it this week. There was a lot of links that did not work. You can get free credits, set up free credit on there with like Credit Karma, Credit Sesame. The biggest thing in there is the second one. Get your true credit score. It's your My FICO. It's going to cost you like $29. It's fantastic. It'll give you the actual reports that we get. So a lot of times people will call me up and they're like, here's my credit score. Well, how'd you get that? On My FICO. Sweet. Let's go over it. Tell me, give me these numbers so I know exactly what your credit score is. So I wouldn't be a proponent of waiting 3 to 5 years to refinance. Why? Your rates are only going to go up. So you're just burning that money for the next 3 to 5 years. But that's your prerogative. So reach out to us. Just see what your options are. We can say, okay, on a refinance, you qualify for this, this, this. Here's what we would recommend. Let's see how much it saves you. If it doesn't make sense, I'm the first one to say, hey, it doesn't make sense. Don't do it. I tell that to people all the time. And I make money by doing your loans, not by turning you away, but I'm not going to do a loan that I wouldn't do. But unless you force me to say, hey, Dan, I still want to do it, because I'll say, hey, it doesn't make any sense. But if you say, hey, I really still want to do it because of, I'll do it. But I want you to be aware of, all the options and the pros and cons with every one of those programs. VOM.RED, don't know what that is. I contacted your company by memo for possibly refi, never got a response. That's hard to believe. But if you would email me, I promise you're going to get a response. If you can, go back to those emails you sent my company, forward those to me, dan@therateupdate.com. I don't know if you used an old email address. If you use you might have forgot a dot or something. Please reach out to me. I promise you, I will get back with you personally. But you should never, if you ever email somebody for, I don't know whose email you got or how you got it, or if you applied online, every one of those people get tagged because the person who runs sales, and to my sales guys, we all monitor that. So I'm not saying you didn't. I apologize, but if you would call in too. Those basically the only time you're not going to get picked up is probably between 10 at night and 2, 3 in the morning. But other than that, you should be picked up. If you leave a message, you will get a call back as soon as somebody gets to the office, because that gets monitored by a group of people as well. So my apologies there. Next one, 707 credit score, looking at 60% loan. I'm getting a quote if sounds right to you. Steve, buddy, you should have been paying attention at the beginning. I need more. What kind of property is it? What term is it? You're looking for cash out? You're looking for rate and term? What are you looking for? Do me a favor. Send me your loan estimate. That is the best way to do this. Send it to Dan, D-A-N, @therateupdate.com. I'll scan it through our system. And it's basically what I need your loan estimate and your credit score. Okay. That your loan estimate is going to give me everything but your credit score. I need your credit score because, as you know, that's one of the biggest factors in your mortgage rate. So I need that. So please email that to me. And I'll get back with you. They said it was 425 on Monday. Yeah. Purchase. Okay. I won't go through scenarios on here, but if you would please, Steve, please email me the loan estimate. Are you locked in? Are you not locked in? Those are things I need to know. So we can go back to also when you say the 4.625 or 4.25, are they charging you for it? That's one area that people don't pay attention to. That's a lot of money in many cases. I get all the time where people are like, hey, I got a 3.99 rate. I'm like, oh, you kind of can't right now in that scenario. They send it to me. I'm like, well, did you realize you're paying $7,800 in fees? Kind of junk fees? You know how I wouldn't, but I'll take that back. Maybe I would if I know I'm going to stay at that house for 30 years. We don't know what we're going to do tomorrow. You're saying, here's what we can do. Many times I'm like, God bless you. You did your homework. You watched my channel well enough. You got something better than I can even find you. That doesn't happen often, though. So thanks so much for reaching out. Bobby, Barry Habib feels that after inflation is tamed and we head into recession, rates come down 8 to 6 months from now. What do you think? I used to watch Barry. He's a good guy. as a mortgage advisor going through this business, a lot of times I started monitoring this, and I learned a lot from Barry Habib. But I study it a lot. I have a degree in economics and finance, and I have a passion for this things. I hope it comes out on this because I love what I do. I don't feel that I think we're going to be in a robust economy as soon as everything cracks, because people they were pent up for so many years. However, that being said, the government is flooding the economy with money. And I was a proponent against that last year. And I just posted a video recently saying I predicted this in 2020. I said, when all this does take place and Corona goes away, we're going to see inflation really sky high. So if you watch my YouTube channel, please check out the videos this week. There was a lot of informative videos that I went through that I hopefully you guys can learn from. But I don't see a recession in the near future. I see the next 2-3 years being really good. I talked to somebody in the housing with a huge housing developer, and they say we have demand we know for at least 2 to 3 years that's coming out of the woodworks. So that is a big piece of our economy, and that helps our economy grow, the housing market, believe it or not. So I don't see it, but Barry Habib, hopefully he's wrong and I'm right. But only time will tell. But if you watch my channel, I give you my reasonings and my facts and my data that back it up. I don't just guess and throw junk at you. I show you things. And if you want me to use different contexts, this week I use Washington Post, CNBC, Yahoo Finance, CNN. I use a whole bunch of things to get a variety of feedback in the economy. So that's that part of it. So thank you so much. I'm in Utah. Utah. We got a lot of Utah loans right now. I'm in Utah and constructing a building. Our estimate finish date is August 17th. I'm trying desperately to find someone who can do an extended lock. Tell me, we can do locks. The good ones up to 180 days. Love to help you. Here's the backdrop of those though. Here's the frustrating part. I'll put it that way. When you're building a house, the builder, in many cases, if they're huge, like Lennar and those companies, they'll come back and say, you know what, we'll give you a $5,000 credit if you use our lender. But that lender can only lock you in for about 45 days. Well, then after you watch this go all the way out to July or June, and then you can lock in, and so let's say rates are 5, but you got pre-approved at 3.25, but now you don't qualify at 5. So now we have to use $5,000 to buy your rate down back to where you can qualify, and you lost all your incentives. I don't know. I still don't know how they do it. It should be illegal. But if you do not have any incentives from your builder, reach out to us. Even if you do have incentives from your builder, reach out to us. Send your loan estimate or whatever you have, Catherine, to Dan at therateupdate.com. Let me look it over. We do have a product that also goes up to 270 days. There's a cost to that. Because you're in August, it'll depend on what we need or what we're looking at. Here's how those features work if you're building. And we have a lot of people freaking out that are building a house. You're going to be done in August. They're telling you 45 days. What a lot of people don't understand, it took a year and a half to get to that point. When you got pre-approved, you probably got pre-approved at 2.25. Okay. Now your rate's going to be probably 4.5, 5. What's that payment putting you at? Okay. That's the first scary part. The next thing is I would lock in now. Why? Okay. There's multiple things we can do for you. We can do a float down, meaning if rates before we close, if rates have gone down quite a bit, we can basically get you that lower rate at no cost. Okay. We also, as the largest brokerage in the country, we don't like doing this. We can also, if rates really drop and the lender we're locked into really won't cooperate with us well, I have all your data. I'll just take your mortgage package and take you to another lender and place you in. Okay, so we have a ton of options versus you going to their one lender who has that one program and then one rate sheet, and you're forced to use them. That's a bad way to do business. And I don't know why they continue to do that. If they're going to give you a credit, they should give you a credit. Why don't they? Because somebody's getting a kickback somewhere. I have no proof. But I can almost assure you there's a reason for all of that. Why else? What do they care? Who do you get your financing through? As long as you pay them once the house is done. So thank you so much for that. Hold on. Yes, I'll post let's do this. Shoot. Let me see if my email's on there. I can add it on there real quick. Let me see 1 second. Sorry about this, guys. I want to put my email address up here. I do this by myself, so bear with me. I appreciate your patience. There it is, guys. Thank you so much for that. Can you post your email? Sure thing, Steve. And Steve, thank you so much for all your comments on here, buddy. I'll be honest with you guys. I'm always scary to do this. I don't know if anybody's going to ask questions, and I don't want to sit here all morning saying, anybody going to ask me? That's my biggest fear. And I did radio for 13 years, and a lot of it was live, and I had my own show. And that was easier than this because I never know if anybody's going to post on here. So thank you. Thanks, everybody, for posting. How many points is it for the 180-day lock? None. You can get a no point. There's actually no fee. We don't have an application fee. We can lock you in, and there's no cost to you. Okay? The 270-day one, we have, I think the cost is 0.625 in points, but that will be credited back to you at the closing. So it's basically a good faith cost from that lender. And it's a good program. Let me recap this because people are rate sensitive. That rate lock for like 3, 4, 6 months out, it isn't today's rate. Okay, what they do is they take today's rate and they pad it. It might be padded by like 3/8 or 0.5%. Again, if you at least know your cap, okay, it can't go any higher than that because we're locked in. If it goes lower, what I was saying is I'll move you to a different lender or do a float down for you to get that lower rate. So you really have nothing to lose. I call it basically our insurance lock-in. You don't have anything to lose. But that's a great point. What you don't want to do is pay a bunch of money. Then you're stuck at that lender. So that's why I say our 180-day lock is the way to go. There's no cost or fee. It's free. So then if rates do come down, you have no skin in the game. I can just grab your loan and put it somewhere else if I can't get you a good float down. So thank you so much for that. Do you happen to be licensed? I am. I'm actually originally from West Virginia. I have a lot of family in Virginia, and my son went to JMU University. He was a kicker when they won the national championship. So, yeah, I'm very familiar with Virginia. Yes, and we are licensed there. My mortgage company said 1 point for 180 days with a float down. Nope. Dude, Steve, you need to email me, buddy. So email me. My email's down below. Send me your loan estimate. Send me any correspondence you have. I'll at least review it. I might come back and the scenario they're giving you might be dead on. And I'll be like, dude, take it. Okay. But I might be able to say, how about if I can do that, do better, doesn't cost you a point, and I can even get you a lower rate. You have nothing to lose. You really don't. I'm not going to bait and switch you. I'm not going to lie to you. All this is going to be, it's regulated. So there's really nothing, I'm not going to pull your strings. And on here, all you got to do is start posting bad things about me and all my business will go away. So, our goal here is to make sure you're as happy as can be. All right. So thank you for that. What's this? Watch the builder dates. If they tell you August, probably. Yeah. Chris, you're on that one. We have so many people that are just beside themselves when they're building a house because it's like they can never get to the closing. Yep, pre-approved at 3.25. God bless you, man. So if you're you're pre-approved at 3.25. Oh, you might be commenting on this. It's hard for me to keep track. Are you locked in? If you're probably not, so what's the going rate? You might be the one that answered above saying 4.625. So again, guys, please call us or email me your loan estimates. I promise you I'll get back to you. Okay. Do we cover the licensing thing for Massachusetts is in because I think we just closed a Boston loan. Why I'm saying this, guys, I didn't mean to just yell just now. We've applied for licensing almost all over the country. They're trickling in. We're about 25, 28 states right now. So they continue to trickle in. If you would, what I'd suggest you to do is call in and just ask. The best person to ask for is Patrick. He runs all my state licensing. So just call the 844 number listed down below, ask for Pat, and he'll tell you if we're licensed in that state or not. So thanks for those questions. Guys, you like my shirt? I'm going out to the St. Patty's Day parade here after the show. Oh, we're over an hour. I'll get through this. Guys, I'm here for you guys. If you guys continue to ask questions, I'll answer. I'm not going to really go past another 10 minutes or so because I don't want to bore everybody, but I love this. So thank you so much for posting. I'm in an ugly market. It's the Bay Area. Sorry, move to Illinois. You want to see an ugly market. Sending now. Thanks, Steve. And I'm going to go to a St. Patrick's Day party after this. I promise you, I will get back with you first thing Monday morning. It'll be me, or if I'm tied up with a bunch of things, I promise you, the person that runs my vice president of sales, I'll have him reach out to you. His name is Alan. Hey, Dan, what happens to jumbos? Suddenly lenders are not offering 89.9 and no escrow waivers. Jumbos, nothing's really happening to jumbos. It depends on the lender that you're using. So I don't know if you're looking for a loan or if you're a mortgage person. Our jumbos, again, it's hard to, if you call one company, they might, here's how business works. The banking system right now, or all banking, mortgage companies especially, we turn off and on our business. If we want more business, not me, I'm not the lender, but if the lender wants more business, they turn rates down. Then they start getting more and more business. When they want to, basically steady it out, they tighten it up a little bit. Then when they want no more or some specific loans they don't want, they really tighten it or jack their rates. There's rates the other day that I found out online. I think if you were here earlier, we went through the same rate we were getting at 3.875. Somebody was, it was costing somebody $6,000 to get that rate. Their rate was probably in the fives. So that's that. But the no escrow waiver, that's a lot of times what they do there. I know UWM had that program for a while, but the rate is higher. So kind of watch everything you're getting into. That's why I always ask people, let us compare for you. We will give you an unbiased opinion. We don't care. We know you want a mortgage. We're going to place you. We're going to scan lenders all over the country to find out the exact perfect one for you. That's what we're doing for you. So I can't reiterate that enough. That's what we do for you. It takes the shopping out of your lap because it's confusing and frustrating. And one little thing that they slide past you that you didn't realize could really cost you a lot of money. And I'm not here to do that. Okay. Somebody said purchase. So I apologize if I don't understand what that part was. Best loan option for loan to buy property and construction. We actually have a one closed loan right now if you're building your own house. So give us a call, ask for Frank. He's the person that runs all my one-stop closings. It's basically, we'll take you all the way from, pre-approvals to the construction, all the way through the end loan. And then you have a loan. You only have to close one time. So what happens in most cases, you're using a Lennar or some other company to build a house. They'll finance it, build it for you. Then at the end, you need is what's called an end loan. What we have, when we have a product, if you're building your own house, it's a one closed loan. So you do the construction, you do everything as one close. And Frank in my office is in charge of that for me. So that's what you can do in that. It's a great option. He just got licensed because of the quotes for that were coming in. We're probably getting 10 to 15 of those a week. And finally, I had him went through the classes for it, the counseling and everything else. And now he is certified to do these for us. So please call in and speak with Frank. I want my, you and me both. Thanks, kitty cat. What type of documentation do you need to get approved for? Would you need to see our 401k? Nope. So thanks for the question, Benjamin. The process is pretty simple. Here's what happens is you apply. So if you want to apply online, go to the rateupdate.com, click at the top right, hit the apply now button. That goes in my computer system. It's secure. When you're done with that questionnaire, it's going to tell you, okay, here's the documentation you need to get the loan approved. So let's think this through. We have your loan application. We then pull your credit. Well, we then run your loan through Fannie Mae, Freddie Mac. There's different underwriting engines. You don't need to know that part of it. But what happens is it'll spit out an approval to us. Okay. So now your loan's approved. So now what? Well, we have to validate that data. Because you could have said, hey, I work at XYZ company, I make $1 million a year. Well, we need to validate it. How do we do that? Pay stubs and W-2s. Okay. So, however, the biggest thing here, the take on this is when we run it, it's specifically going to tell us what we need. There's many times where it'll say, you don't need an appraisal, and we only need one pay stub. Okay. The only time we're going to need assets in your case, I might need your 401k statement or your something, is if you need to bring cash to the closing, like you're building a house and you need to bring $100,000 to closing, or some other reasoning. But normally, let's say if you're short to close $1,000, you might have it in your savings account. So I don't want to ask you for more things than we need. because I don't know where that's taking me. I don't know if I'm opening a can of worms. So that's my problem. So we only ask you, a lot of times we'll ask you for all of it, but then we only use what we have to. So if you're concerned for some reason why you don't want those to provide those or whatever, let us know, because there's probably a great way around it. But great question. Thank you so much. Next one is best loan option for loan to buy property and construction, buying in the state. Exactly. Call us, talk to Frank, 844-775-5626. Talk to Frank. He's our one closed loan. He'll help you walk your loan through the pre-approval process all the way to the land, the house, the builder, moving in. So that's who you talk to. It's a huge program. That's exactly why we got him certified in the last month. So thank you so much. And Samit, you're a broker, fellow broker, buddy. Cool. Hope business is good for you. I don't know where you're located. Shoot me an email. I'd love to talk with mortgage people just to pick your brain, what your area is doing, how your programs are. You know, you having some success here, some difficulties here. I'd love to talk with you. Shoot me an email at dan@therateupdate.com. Thanks you so much. Paid $40,000 down with Lennar and closed is supposed to be 528, but a loan is not going through underwriting. Can I cancel a loan with them and have? You absolutely can. The only thing, Dennis, I greatly appreciate that. What my concern was, I don't want you to leave money on the table. So I would like to talk to you, I guess. So email me and I'll call you on Monday. I want to know how much money they're giving you. And if they're not giving you any money, dude, I'm all yours. But if they're giving you money, we got to weigh the two, because what would I do? If Lennar is giving me $15,000 to use their lender, I'm going to use their lender until the government shuts that down. But if they're not offering you anything, I'd love to help you, because I can almost assure you we'll get you underwritten probably within 2-3 days and approved with conditions. I'll lock you in, or at least monitor your rate lock for you. And then that takes all the fear out of that. You should have been probably locked by now. Because I don't know what they're waiting for. So you're probably not locked in anyways, and you probably should have been locked in when the rates were in the 3s. But unfortunately it didn't. So please reach out to me. Guys, I always say this, and then I seem not to get many emails from you guys. So either email me or call in and talk to one of my guys in the office. So thank you so much. Dennis in Florida. That's Florida, Texas, Arizona, and California. We do the most business. I'm in Illinois, and we hardly do any business in Illinois. I'm kind of fine with that. The taxes here are just crazy. Thank you so much. It was so helpful. You are more than welcome. But please, all my guys are seasoned, and all the loans do come through me as well. You might even be talking to somebody. They're like, "Hey, Dan's sitting right here. He wants to say hi." I talk to a ton of people all day long. So please call in if you would, or just email me. $5,000, dude. What's probably going to happen is we can get you. You should have been locked in. We can probably lock you in now. By the time they get you underwritten, this and that, and locked in, the rate we're giving you now, it depends on where rates are going to go. And why I'm saying this happened a ton in the last couple of months. If we would have locked you in, you would have been better off. They wait till 30 days prior to closing. Who knows where the rate is? And many times they're sucking all that $5,000 money that they give you in the credits back to the lender, the builder's lender, and they're taking it as fees and a rate buy down. So normally of that 5,000, you might net a couple $100. So please, yes, reach out to me. Send me an email, send me whatever you have from them so I can analyze it and get back with you and say, okay, here's what I would do. All right. So thanks, man. Greatly appreciate that. Email sent. Look and speak. Can you speak on USDA loans? I can. If you're outside, we just approved a USDA loan right outside of Austin, Texas, which I even threw me for a loop. USDA loans are awesome. Go to the USDA, just Google USDA property or qualifications, USDA eligibility. Okay. The first two things you got to do, make sure your property is located in a USDA area. Okay. That's number one. Number two, there are income restrictions. So if you Google USDA eligibility, it'll give you a link for your properties, plug it in, it'll say eligible or not. Then go in and really dig into the income calculator and be specific how many people you have in the home and your income, and it'll say you're eligible or not eligible. If you're eligible, it is the way to, it's 100% financing. It's the way to go. We can do that for you if you want to email me your address and your income and so forth, and I can run that just as even a check. But do that for me. We do a lot of USDA loans as well. We do manufactured homes. We do if it's a residential home or property, we have the outlets for it. Okay, so thank you so much for that question. No, locked, and will they penalize me? No, there's no penalty. If you want to move lenders, they can't. There's nothing we have people sometimes that'll call in and say, hey, this place offered us this, or my same lender that I was refinancing and paying off, they come back and offered me, 2.5 with no fees. I'm like, dude, take it. All you're doing is financing money. So you didn't sign on any dotted line restricting you to that company only. And that's huge, because if you were, then they can really hose you. So you can change at any time. Do you do Colorado? Yes, we do. So Steve, we're like 100 for 100 for you. So we'll talk on Monday. I promise. I'll call you. And then we'll go through and we'll help you out. I promise you, buddy. All right. Next thing is I have found my thanks, kitty cat. So middle score 792. Okay, let me elaborate on credit scores. Then I'm going to finish up here and get to the St. Patrick's Day parade. Credit scores. I did a video the other day. Check it out. It's a retro back to one of the first videos I ever did. But just so you guys know, don't pay attention to the credit karmas, the credit sesames, your Discover score, and all that. You need what's called your FICO score. Okay, you can get that if you want. You can go to the creditscoresandmore.com. It's a website I created. It's section 2, step 2. You go there, it's like $30. It'll give you all of your credit. But what I want to tell you is, guys, don't freak out that you need an 800 credit score. I don't know if you paid attention when I started the thing. If you paid attention on the LLPAs on how we started, it said 740, equal to 740 credit score and above. Okay. It doesn't matter if you have an 810 or 741, you're getting the same rate. So don't go through sleepless nights thinking I need an 800 credit score, because it really doesn't do much better for you than a 740. So it's a good goal to have, but don't lose any sleep over it. So that credit score is fantastic. And Kitty Cat, please email me or make sure you call us. That's why we're doing this video. I'm here, and I'm thankful to you guys for watching. Please reach out to us. We'd love to help. And then Dennis, thank you. Call Monday. You betcha. If you want to talk to me, I'm in on Monday. So if you're talking to one of the guys, say, hey, this is Dennis from the YouTube Live. Dan there. They'll walk into me. I'll grab it, and the first thing I'll be like, dude, what's up? That's how I answer. So next thing is, I was offering a 180 lock at 2.875 on a 7-year fee. Is 1900 new construction home prices. Good deal. I don't have my rates open, and the rates are shut down for today. I'm not trying to avoid your question. Here's the hardest thing for me to answer is that, especially in the evenings and on weekends. I don't know how the markets are going to open. Okay. And I don't really monitor the 7-1 ARM, diligently. We're still not doing a lot of ARMs because rates are still in kind of a sweet spot. But if you want to email me that question with the specifics, I promise you I'll come back, or email me your loan estimate. And that's the best way to give me, or that quote that you were sent. Let me review all the details, and I'll get back to you and tell you if it's a great deal or not, or what else is out there. Remember, I can scan over 130 different lenders within a matter of 30 seconds. So that's one of the things we have for you. So thanks so much for posting and spending your Saturday with me. I think we got one or two more. Realtors suggesting buying a fixer up 203K loan. Have a good thing. Yeah, 203K. So you have we're going to elaborate on this. And yes, Ernie, I do Tennessee. So reach out to us in Tennessee. But the renovation loans, if you're looking to renovate a property, there's what's called there's an FHA 203K streamline. It'll give you money up to 30. The guidelines say 35,000, but it'll truly give you 30,000 in hand to do TLC. You can't do anything structural. Okay. Then there's a 203K full. You can basically get, as long as the loan amount is equal to or less as the as completed value of the property, You can do anything you want. And then Fannie Mae and Freddie Mac also have renovation programs. So I do have a specific person in our office that handles those as well. So please call in and ask for Brady. He handles all of our rehab properties. So it's 844, the number's down below. Ask for Brady. He handles all of those for us. So thank you so much. I do credit repair as well. After 760, it did not make a difference, but 807 sure makes me feel better. I know. And my son, my oldest son, is the same thing. He's just diligent about trying to get an 800 credit score. I'm like, God bless you, man. Do you do Tennessee? Yes, I do. So, guys, that is it for today. We are at an hour and 20 minutes. It's the longest one so far, and I've only done 3 or 4, but I greatly appreciate it. We'll be doing this again next week. On Saturday, I'll be posting a post probably on Monday or over the weekend asking you guys what you wanted me to talk about. If you're a realtor, please go to my website, therateupdate.com. Let me see if I can go back in there and find this for you. This is where I need you guys' help. So us YouTubers can help each other. Let's go in here, and we're going to say right here, if you're a realtor or a mortgage advisor, but realtors, I want to get you on our realtor referral program. Go in the website, click right here, okay? And it's a little questionnaire. I want to just kind of vet you a little bit to make sure that you're a good fit, because anybody I refer to you, you're representing me. And so that's that. And then we're also going to start on Thursdays, this coming Thursday, a Thirsty Thursday with realtors only. It'll be special invite. I'm working on that right now. So you guys can ask any questions behind the scenes on how we do things or whatever you have. So that is it. Same thing here with mortgage advisors. If you're a mortgage advisor looking to maybe make a change, see what maybe the Frio team has to offer you, or just kick the can and ask me any questions, go into this form here, the mortgage advisor, click it, fill it out. I will be calling you and going through whatever questions that you have. So that's it. Thank you so much, guys. Have a great weekend. Happy St. Patty's Day. And I'll see you Monday morning on the morning update. So God bless, guys. Thanks again for watching. I can't thank you enough. See you soon. Bye-bye.